The street is definitely either relieved or happy that there was no negative surprise in the IT earnings so far. Reema is here tracking TCS and Infosys. Reema, big movers there.
Oh, absolutely. TCS has reported a revenue margin beat. For in-fee revenues have declined on a quarter-on-quarter basis, but still much better than what the street was expecting, or not as bad as what the street was fearing. There are two key takeaways from the TCS management, which is a read-through for the entire industry. One, FY25 is going to be better than FY24. Analysts knew it, but it's always better when it's corroborated with the management. And also, when asked about the overall environment, the management said, Kriti, the CEO of TCS, said, we feel reasonably optimistic going into FY25. The second one, and this is the big one, BFS returning to growth. If you know, more than 30% of the industry revenue comes in from BFS, and BFS is where we've seen the maximum pressure of the weak macros. If BFS is returning to growth for TCS in Q4, it's a big call and a big read-through for the entire industry. Also separately, if you note, in the last 1 year, it's more the mid-cap IT, it's the turnaround plays like your Wipro, HCL Tech, which have done very well. So the Nifty IT index has gone up 26% in the last 1 year, where Infy and TCS have lagged. Infy in particular, even with the up move today, is only up 7%. Now here's what brokerages have to say. Bernstein say the Infy management reiterated that its deal wins should start ramping up from the end of FY24, and they're forecasting a 10% revenue growth for next year. Jefferies has raised its EPS estimates by 2% to factor in the beat, while Kotak says that they've cut the in-fee revenue estimate for next year to 6.6% from 9.1%. And for TCS too, they've cut the FY25 revenue growth to account for a cautious start to the budgeting cycle, while they are expecting a recovery to only take place in H2 of calendar year 24. But brokerages are more bullish, post these numbers, post the management commentary. And while the management may not have spelled out that things are recovering on the ground, they're still calling it status quo. I think the underlying message from the body language is that things are improving, and analysts too are reading the numbers with rose-tinted glasses, maybe.
All right, thanks a lot, Reema, for that.